Today in the livestock market, cattle did slip a little bit. The weak export sales, I think, is one of the reasons why it's kind of pushing a little bit lower. That cash market just did not catch up to the futures like they were hoping, and the slowed slaughter levels also seems to be backing up some supplies. That normally is a recipe for a lower market. But the interesting thing is on the feeder side, the feeders were higher. That easing corn prices did offer a little bit of a support in the market. They just have been moving opposite to the live cattle. And that's kind of a surprise as of late. Now, there has been strong demand still on the beef side, and traders are again looking to increase in the cash prices, which they're expecting this week. But packers still need to buy, and I think that that's going to be good for the beef complex to really swing back up a little bit, at least at the time that the pullback in the grain market, it might give a little breath of fresh air for the beef side. Now, in hogs, the market was steady, but the lower weekly export sales really put some pressure on. We did make it a new low, just a new recent low, because we've been down about 8 sessions in a row. Now, cash prices are a little bit choppy on the hog side. The possibility that China is slowing their imports could be an indication that maybe the high is in. Now, I don't really necessarily want to bet against the high for the hogs, but the significantness of what's happening in China could make it a lot more difficult for the hog market to resurrect yet another surge and make a new high. Now, it's hard to tell if this is actually going to be the top, especially when we're just moving into grilling season and the summer. But that 8-day decline, I think, might be a little bit of a signal right now. And of course, if you start to gain momentum on the downside, the market has a long way to fall. But we're not going to completely give that up just yet.